Australian living standards dropped to their lowest level in 8 years. The local share market surges 1.7% to 10-week highs, and Australia Post finally dumps daily deliveries of letters, but you can get a parcel within 24 hours. Welcome to Fear and Greed Business News, Australia's best business podcast. It's Thursday, the 7th of December 2023. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael. You'll be happy I started my online shopping last night for Christmas. Very, very excited about it. Did the whole lot, got through, signed up. I thought, better check the delivery date. Yeah, sometime between the 24th and the 30th of December. Excellent work, Sean. Excellent.
You missed all of the Black Friday sales.
Mm-hmm.
Well done.
Yep, no, did that. And the kids will get their presents after the December 25th.
So that's why you're in such a good mood this morning.
That's
Look,
right.
After the show, you have an interview coming up with John O'Loughlin, who is the Managing Director of Asia Pacific at Coinbase.
Yes, so Bitcoin is particularly hot, but cryptos are back. And so we talk to John why they're doing so well. We talk about how to invest in them. Now, Coinbase is actually listed on Wall Street. It's a crypto exchange that's listed on Wall Street, the only crypto exchange that's listed on Wall Street, which means it has all sorts of governance over it. So we thought that they're a good group to go and chat to about Bitcoin and cryptos. And so we just have a really interesting chat about where it's been and where it's going.
Yeah, it was a really interesting, just rational conversation. I really enjoyed it. And it's great for anyone who is interested in investing, but interested in crypto in particular. So it's coming up a little bit later on. Sean, the main story this morning, the economy expanded by just 0.2% in the 3 months to the end of September, demonstrating the increasing toll that higher interest rates are having on households.
In short, Australian living standards are now at their lowest level in 8 years, thanks to high inflation, rising interest rates, and high taxes. Bureau of Statistics GDP figures released yesterday shows that the annual rate of growth is 2.1%, which is lower than the 30-year average. Growth per capita fell during the September quarter to minus 0.5% as the population grew quickly thanks to booming migration. It's what you call a per capita recession. So if you base it on the number, on the individual in the economy, we are actually going backwards. As the Bureau's head of national accounts, Catherine Keenan, put it, it was the 8th straight rise in quarterly GDP, but growth has slowed over 2023. In the most recent quarter, government spending and investment drove the result. What's missing? The consumer, the interest rate sensitive consumer.
So the consumer sector is finding all those rate rises over the past 19 months now just a little bit tough by the sounds of it.
Yes, and it's showing through in the national accounts. There's lots of moving parts. For example, government rebates on electricity meant spending on energy drop, but the Women's World Cup boosted transport and eating out. If you put all that into the mix master, as we like to do, overall household spending has clearly slowed over the past year. Discretionary spending is down while essential spending is flatlining. Real household disposable income fell for the 8th consecutive quarter. So real takes into account inflation. Now that's on the back of those cost of living pressures. And that's why we can say living standards are at their lowest level in 8 years.
I still find it fascinating that we're able to kind of essentially pinpoint an event, say, like the Women's World Cup as having delivered a boost, say, to transport, that we're able to kind of get that specific about it. It's amazing.
Yeah, it is pretty cool, isn't it? There's so much data out there. One of the interesting things came out yesterday is the household savings ratio. We all got to know that during COVID because it soared and we had all that, was it $300 billion in savings accounts in the banks? Well, that's fallen. In fact, the savings ratio was down to 1.1%, which is the lowest since 2007. All those accumulated savings that we had during COVID, they're being eaten into very quickly.
What about inflation, Sean? What do the national accounts say about that? And I suppose, what kind of insight does it give us into interest rates?
Well, something called the domestic demand deflator is a decent gauge for consumer prices. It was 1.3%, plus 1.3% over the quarter, just over 5% for the year. That's close to the official consumer price index readings. Real unit labour costs rose by 1.2% or just under 4% over the year. Now that is down though from 4.9% the previous quarter and is much more consistent with the inflation target. If anything, the numbers yesterday really suggest that there isn't much of a case for any more rate hikes. That's not just those inflation measures, but also the fact that the economy is slowing so much.
The domestic demand deflator. It's just, it really feels like that's the kind of thing that someone, if they were writing an economics kind of exam for university, they would ask a question about that. It's just got exam question written all over it, don't you think?
Yeah. Explain the domestic demand deflator and why it's an accurate reflection of the consumer price index. Explain the DDD and why it's an accurate reflection of the CPI. Something like that.
Gosh. Oh, there's economists listening to this right now that are just in heaven hearing you say a sentence
Loving
like
it.
that. Whew. Now, Sean, local markets, how did they perform yesterday?
Well, it was a boom day with the S&P ASX 200 rallying the most in more than a year. Around 85% of the top 200 stocks closed higher. By the end, the benchmark was up 1.7% to 7,178 points. It's all about interest rates and the growing belief in the market, particularly after yesterday's growth figures, that there won't be any more rate rises. Interest rate sensitive sectors like the real estate companies, the bank and tech stocks, they're all among the best performers. Property Group Mirvac, for example, it was up 4.5%. Dexus and Scentre Group were both up 3%. Goodman rallied nearly 2%. The materials sector rose on the back of higher iron ore prices. BHP led the way. It was up 1.5%. All the major banks jumped sharply. National Australia Bank was best, closing 2% higher. It's a good day for Coles, for Woolies, for Wesfarmers, the energy guys, Woodside and Santos, and definitely a good day for a bunch of tech stocks like Computershare, WiseTech Global and Xero. I would say a sea of green. Michael, a sea of green. In corporate news, a bit going on. Perpetual's share price climbed 6% after it announced a strategic review of its corporate trust and wealth management businesses. Basically, the listed fund managers considering separating the two. Evolution Mining's share price fell 13% to $3.60 after it raised $525 million at $3.80 a share. Not sure I'd be real happy getting into that raising, given that its share price is now 20 cents below what I paid. Woodside Energy, it signed a sales and purchase agreement with Mexico Pacific to purchase 1.3 million tonnes per annum, that's about 18 cargoes per year, of liquefied natural gas over the next 20 years. Its share price closed up 1.1%.
Wow, there's a fair bit going on. What about international markets, Sean?
Bitcoin's boom, boom, boom. It continues its run. The digital asset is now trading above $44,000 a unit. Confidence about no more rate rises in the US, and a Bitcoin spot ETF is driving the surge. Its value is up about 15% in 6 days. Obviously, this is a good entree or segue into our chat after the show. My chat with John O'Loughlin, Managing Director of APAC at Coinbase. We talk all about what's going on in the Bitcoin market. Otherwise, Brent's flat, gold remains strong, and the Aussie dollar is buying just under 66 US cents.
Okay, we have a lot of ground to cover today, Sean, so we better take a quick break. We'll be back in a moment with the rest of the day's business news. Sean, National Cabinet met yesterday and the outcome is tens of billions more in hospital funding and GST top-ups from the Commonwealth in return for the state's support for NDIS reforms.
On a net basis, I think the states ended up better off. The meeting was all about the National Disability Insurance Scheme funding. As a result of the agreement between the feds and the states, the NDIS will be restored as a scheme for the permanently and significantly disabled, as originally envisaged. Foundational supports, such as those for kids with mild autism or early developmental challenges, which is rendering the NDIS unsustainable, will no longer be included. Treatment for those conditions will be via a new scheme funded 50-50 by the states and Commonwealth and delivered by the states through schools and childcare centres, as it was before the NDIS actually existed. Now, Canberra will extend GST top-up payments beyond 2027. The states wanted that one. Canberra will also put more money into Medicare and increase its share of funding of state hospitals. In return, the states will increase the cap on their share of NDIS funding from 4% to 8%. Everyone seemed pretty happy by the end of it.
And just while in Canberra, Sean, new tough laws establishing a preventative detention regime for non-citizens passed Parliament last night.
This is the legislation in response to the High Court ruling indefinite detention illegal. While the legislation has backing from both sides of the House, a coalition has used the government's handling of the issue, including the arrests of 3 former detainees, to call for ministers to be sacked. A 4th freed detainee was arrested by the Australian Federal Police last night. That will just up the ante on the government.
Sean, Climate Change Minister Chris Bowen says Australia will endorse a formal phase-out of fossil fuels at COP28 in Dubai as countries at the UN summit prepare to negotiate a final deal to tackle global warming.
Nothing like a formal phase-out of fossil fuels, Michael.
Oh, it was quite an ask to get me to say that just then. There we go.
You did well. The draft release, which came from the UN climate body, proposed, and I quote, an orderly and just phase-out of fossil fuels, end quote, which, if adopted, will mark the first global deal to end the oil age. Now, the deal is sparking, and particularly the wording of the deal, is sparking heated debate among the nearly 200 countries at the fortnight-long conference in Dubai, with some Western and climate-vulnerable states pushing for strong language, and some of the oil and gas producers are keen to leave that strong language out. Bowen said while Australia backed a strengthening of language and efforts around the mitigation of climate change, he expects the wording of the agreement to change during negotiations. No doubt he's correct on that one.
Can you imagine just how hard it would be to negotiate the wording in a situation, especially when you have so many parties involved in this? It would be near impossible to find a consensus.
And it's negotiated in English, but there would be so many languages where the meaning of an English word may be taken very differently in another language, for example, let alone actually getting agreement.
I know you've been involved in kind of union negotiations and things. How would you like to tackle this kind of thing, Sean?
My God. No wonder it takes years.
Yeah, indeed. Now, Australia Post, I mentioned this at the top of the show, has finally bitten the bullet and said no one across the country will get daily mail deliveries anymore, but parcel deliveries will be dropped off every 24 hours.
Did you know, on average, people still receive 2 letters a week?
I would believe that.
Hey.
I reckon I would actually get more than that. I don't know why. I still just keep getting a lot of things from the bank. Councils
and things like banks,
my water bill always comes.
No matter how much you try and make it digital?
Yes.
It still turns up?
Yep. It's persistent.
Anyway, times have certainly changed. Australia Post recorded a $200 million loss last financial year, and its priority has shifted to parcels in an effort to basically not go out of business. In fact, Aussie Post delivered 500 million parcels last year. Now, in a recent trial, the company got posties to skip some letter routes and deliver parcels. Parcel deliveries went up by 20%. So now Aussie Post has said nowhere across the country will there be daily post deliveries. Also, stamps for letters will go from $1.20 to $1.50 next year. That's subject to the competition regulator approval. But just don't rely on the post anymore, Michael.
Okay, noted. Sean, Endeavour Group held an investor day yesterday and boss Steve Donoghue was very upbeat, forecasting a big jump in hotel earnings over the next 5 years.
The hotels part of the business makes up 40% of earnings and has been under some pressure. Endeavour, which operates over 350 hotels, along with the Dan Murphy's and BWS liquor chains, set a target to deliver 10% plus shareholder value from 2026. It wants to reduce debt and spend about $270 million in hotel refurbishments and redevelopments. Its share price closed up more than 2% yesterday.
Rio Tinto has deferred billions of dollars of spending on decarbonisation projects as higher than expected costs at Guinea's $23 billion Simandou iron ore project pushed the miner towards an expensive new growth phase.
Rio will raise total spending to $30 billion over the next 3 years, and Chief Executive Jakob Stausholm aims to increase the production of iron ore, copper and aluminium, according to a report in the Financial Review. All that extra spending, something has to give. It seems to be spending on decarbonisation. Simandou will be a major avenue of growth in the next 5 years. Rio said its share of costs there will be about $6.2 billion. Now, iron ore is the biggest commodity export earner for Australia and for Rio, in fact. But Stausholm played down the effect that Simandou's volumes could have on iron ore markets and prices, saying the mine would provide only about 5% of global supply. Still a fair chunk, I reckon, 5% of global iron ore supply. Rio also plans to boost production, iron ore production that is, incrementally in the Pilbara. It will build 5 replacement mines in the next 6 years to maintain its export rate.
All right, turning to international news now. And how about this one, Sean? India is an emerging market, but several years of investing from the Modi government is paying dividends, with the local share market hitting the $4 trillion mark yesterday for the first time.
It is now the world's 5th biggest equity market and is quickly narrowing the gap on Hong Kong. The market capitalisation of companies listed on NDIS exchange has risen by $1 trillion in less than 3 years. Already trading at all-time high levels, India's key stock benchmarks have risen more than 13% this year. They're headed for an unprecedented 8th straight year of gains, according to Bloomberg. In contrast, the key Hong Kong equity measures have fallen 17%, with the market's total value dropping to less than $4.7 trillion. India's pretty amazing economy over the last decade or so. It's now the world's most populous nation. It took over from China earlier in the year. It's the fastest growing major economy. It has all this stuff going for it, things like great education standards, pretty good corporate governance. The technology infrastructure rollout over the last 10 years has been enormous. Lots of people investing in India at the moment, Michael.
It is a pretty remarkable story, isn't it, Sean?
It is, indeed.
There's a very good chance I'm going to use it on the weekend edition, possibly in the most remarkable story category, but I'm not going to give anything away just yet. You'll have to
wait and see.
See whether you can beat me. Last one. US President Joe Biden says he may have decided to serve just one term if Donald Trump were not seeking to return to the White House.
The 81-year-old president said Trump poses a grave threat to American democracy. I quote, "If Trump wasn't running, I'm not sure I'd be running," he told donors at a campaign fundraiser in Massachusetts a couple of days ago. He continued, "But we cannot let him win for the sake of our country." Now, the president has recently stepped up his warnings that Trump would dismantle the US's democratic institutions, roll back laws that allow more people to access healthcare, and push more restrictions on abortion rights. The problem for Joe Biden with his comment is that it plays into worries about his age and basically lack of voter appetite for a Biden-Trump rematch. Polls have shown most Democrats don't want Biden to be their party's nominee due to concerns about his ability to handle the job. For his part, Trump heard the comments and then said he didn't think Biden would make it physically through the grueling campaign ahead. His rival's mental state, he said, is possibly equal, as bad, or even worse than his physical state.
I think there's something kind of ironic, isn't it, about Donald Trump sledging Joe Biden over his age when Donald Trump is 77.
Yeah.
So he's not that far behind.
No,
I think it's just you would think it would just not be an area that you would kind of comment on.
Tell Donald Trump that.
Yeah, that's a good point. I don't think anyone's ever said to Donald Trump, "This is an area you can't comment on."
Yeah, poke the bear.
It draws him
Off
to
we
it,
go.
moth to a flame. Okay, up next is the Fear and Greed Daily Interview. We've mentioned it a few times now. John O'Loughlin from Coinbase.
All about cryptos, investing in Bitcoin, etc. Well worth a listen.
It's up next in the Fear and Greed playlist on your podcast platform, or you can find it at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Michael.
It is Thursday, the 7th of December, 2023, and make sure you're following the podcast, and please join us online on LinkedIn, Instagram, X, and Facebook. I'm Michael Thompson, and that was Fear and Greed Business News. Have a great day.